Hey, ladies and gentlemen, real life traders from around the world. This is Jerremy Alexander Newsome, and I hope you're doing magnificent. Today is indeed Monday. You should be doing pretty well. I hope you had a good weekend. I had a pretty good weekend. Got back from California late early Saturday, and then went to the art crawl in downtown Nashville and got +1 culture points for doing that. So that was fun. And just kind of hung out and watched some movies on Sunday, catching up a little bit on my films. Watched Fury. That was really good. Gone Girl with Ben Affleck was surprisingly good. I did like that movie. It was pretty solid. So if you guys get a chance to check those out, let me know. As far as the market is concerned, kind of digging today's action. So today on the SPY, we're looking at, and if I zoom in here, you can see that we kind of have a little bit of an evening star reversal-ish pattern shaping up. Now, I don't think this is a free fall of the market by any means. If we do break lower tomorrow, that means it will probably pull back to the 202-ish region and then likely pop. If we do pop from there, that'll be really, really fascinating to see, but I'll be keeping a close eye on it. That's kind of my thoughts. That's kind of my plan. And if it does happen, I would be pretty bullish on the market. As of right now, legged into an iron condor on the SPY, so a 211, 212 bear call spread for 15 cents. That's a pretty good limit. And we also had the bull put spread down here already. So as far as the bear call spread, legging into it for February week 4, I'm really not going to concern ourselves at all unless we get a close above Friday's candle. And then we'll look to unravel or exit depending on the time frame if we close above 209. So I'll be keeping an eye on SPY. The DIA, very similar. A little bit of an evening star reversal pattern. Let's see if we make a lower low tomorrow. Probably won't. If we do, I'm looking to maybe a gap down and then to get bought. That's kind of my anticipation for tomorrow's market. And if that does happen and we start making a higher high, higher low on Wednesday, I will be pretty bullish overall. QQQs, here's the Qs. Same type of thing. Nice little candle, a little bit of a pullback candle, and everything looks fine. We have a bull put spread expiring this week, 98.97, and we'll be keeping a close eye on that. And, of course, the IWM. The IWM has a little bit more of a black candle than the SPY and the Qs. Again, kind of an evening star reversal pattern at that really, really strong resistance. So let's just keep a close eye on it, see what happens. And I'm not saying this is going to happen for sure, but tomorrow or anytime really in the recent future, if we do gap up strongly, let's say tomorrow we gapped up to 121.75, which I really don't think will happen. But if it did, I would be unraveling my bear call spread because it's a very, very strong gap on the IWM. So my bear call spread expires in a week. Well, let's say a week and a half, next Friday. So pretty much two full weeks, and I'll keep you guys posted on that. Let's look at some other analysis in regards to what else is going on out there. Apple, of course, always looked at in the real life review, and today it looks nice. I mean, it's just still trading within that pennant. Volume is low, and the moving averages are catching up. I'm really, really excited about this trade. Richard Karasik is in a 110-105 bull put spread. Ron McKee is in a 106 put sale. Jay is in a 115 put sale expiring February week 4. And I got into the analysis of a 114, 113 February week 4 bull put spread. So bottom line, a lot of people are bullish to neutral on Apple. We're at a very strong resistance. We're above the moving averages. They have good direction, good angle. There's a good gap. There's good volume. Let's see what happens, right? If we close above 121.06, I will be more bullish than bearish. And ultimate targets around the 127 and the 132 region. Doug has a 126 covered call expiring this week, so we'll be keeping a close eye on that. But overall, I'll keep you guys updated when and if it does break out. I will be more bullish than bearish. Amazon doing its thing right now. I really like the slowdown, the wave rotation. Anticipated that, expected it, and actually drew it. So if you did get triggered into the bullish swing trade, I think that's fine. Everything is still playing out okay. The protective put has plenty of room on it. The stock has plenty of room on it. Volume is very, very low. So again, I'd expect something like this, and then hopefully ultimately a rotation up to about 407.03. As far as Alibaba goes, Alibaba really is in kind of the buy low, sell high territory, right? We got a little bit of spinning top today, and I don't think that we're going to necessarily bounce tomorrow, but the low of today and yesterday being Friday are only 5 cents off. So if we do make it down to 84 and some change, this is a good buy low, sell high scenario. And this stop placement really is for that exact strategy, right? We come down to this support. Either you're doing put sales or maybe you're just flat out buying the stock. And if we bounce or if we accumulate in this area, 84 and below put sales would be pretty decent as far as premium returned. And if we close below 82.33, I would begin to have a little bit more of a bearish perspective on Alibaba. But until we do that, I think it's kind of in a buy low, sell high territory. Twitter, after the gap, really, really strong gap on Twitter. And this wick is not accurate. I verify that on the intraday chart. So here's the hourly on Twitter. And today we had some bullish analysis, which did get triggered in today on Twitter. This was during the trading floor. So I'm in on Twitter at 47.47, protected put 45.71, and I'll only get stopped out of the long trade if we close below 44.14. Did have a 45 put sale expiring in 2 weeks for Twitter, so that should play out okay. But I like the fact that we're bouncing off the 10 exponential and the hourly. Here's your daily chart. It really is quite a strong gap. Again, not as strong since that upper shadow is really not there. But the fact that we're above this gap action is pretty decent, ladies and gentlemen. Honestly, I could see some of this and some of this and some of this up until about 55.76. That would not terrify me at all. So I do have a little bit of a bullish perspective on Twitter, and it'll be interesting to see how and if that in fact plays out. Ladies and gentlemen, thanks so much for watching. Had a good day today on the trading floor. Broke even on MU. Micron Technology got into an MU trade this morning, a bearish retest trade. Here's the 5 minutes. Not much happened at all. And by not much happened at all, I mean exactly that. Not much happened. Got in bearish here and exited here at the end of the day. So flat break even on MU, no win, no loss, no big deal. ABBV, however, did work out a little bit better. This was also a bearish retest gap. Got in bearish back in this area. It was 55.96, and stop was 56.16. Target was here, and then the low of the day. So got out of that trade with about an R and a quarter after everything's said and done. Our day keeps the bill collector at bay. So as long as we can stay profitable and mitigate our risk and trader plan, that is what makes us real life professional traders. Ladies and gentlemen, thanks so much for watching the Real Life Stock Review. I appreciate it. Have a great Monday night. I'll see you Wednesday in the next one. Until then, remember, love life, live life, and trade it. See ya.